Welcome and hello, hello and welcome, welcome and hello, hello and welcome indeed. I would like to welcome you and just say hello and welcome, welcome and hello. Hello, welcome, welcome, hello. It is un poco mas, of course, you know that. My name, as they say in this game, is Tabasco Rojas, of course, former Montreal Expos relief pitcher. Of note, I have the worst earned run average in the history of Major League Baseball. They also call me Stock Karen. They call me Hurricane Lopez. They call me Little Danny Cornbread DiCarlo out in Las Vegas. Why do they call you cornbread, you say? Because I'm moist, I'm doughy, and I crumble under pressure. The great Naughty Lurker has joined us. The smartest man in the room is also the baldest man in the room, in the case of Naughty Lurker. Um, anyway, of course, he's alone in that room, so it's a low bar, but oh, I'm hilarious. No, I'm not. It's just a big turd of a day. Anyway, guys, it's un poco mas. Hello and welcome. Welcome and hello. Sorry, Anthony. I didn't even know you could do that. I just click a bunch of buttons. I try to set it for 11:55 because sometimes I put it on when I first started. I put on like a timer, and then I would get delayed. I would get a phone call, and then people would get upset about that. So pretty much as soon as I set up the live stream, I'm just going to start as soon as possible. Um. Anyway, guys, I want to talk about SoFi, of course. I actually kind of broke my own rules today because I really promised myself I was not going to buy any more SoFi unless it went down to like 15, 14, 15 area. Because remember, I said, guys, if it falls below those low 20s, there really was no support on the chart coming down to about 14. So that concerned me. So I was like, that's where I would really reload. But I don't think it's going to get there. I know I said that about 20, so I have absolutely zero credibility. But I'm looking at the multiples. I'm looking at so many pieces of evidence. I'm and overall and above all, I'm looking at the trends. I'm looking at what is actually happening with this company, with their product mix, with their margins, and above all, with their EPS and where EPS is going. Everybody's saying at the outside they're going to make, 80 cents in 2027. That's the best they could possibly do. And then this year they're modeling for 50 cents or whatever. I mean, I don't know, find me in the club, bottle full of bub, but I don't buy into this 50 cents nonsense. A couple of just data points apropos of nothing. 62 million shares volume today. Perfectly bullish volume. Now I know what you say, how is it bullish volume when the price is dropping like a, old man statistical. No, sorry guys, I'm a little bit wacky today. Just so much stuff going on. Had emergency at home, had to run home. Had an emergency at the office, had to run back to the office. I'm, running around like a fat guy with a tiny wang with multiple emergencies going on, to use a apt analogy. It's not really an analogy, it's just a description. Anyway, sorry if I'm rambling. I'm pretty much always rambling. This is another data point I just want you to think about. Q1, SoFi was making 6 cents, then 8 cents, and then 10 cents, and then 12 cents. So inter year, they doubled their earnings from 6 to 12 cents. Now, considering last quarter, they added a million new members, high quality members, considering that cross selling is increasing, considering that net margins just in this year went from like whatever it was, 13 to 18.5. How on earth do you figure that their EPS is going to go down quarter on quarter? Now, you might say, okay, historically Q1's a little weaker, so it could dip to 11, but you're still going to see this kind of growth trajectory. You could easily see SoFi making, I can see SoFi making over 20 cents in Q4 this year. Very, very easily. I mean, think about it. They're going to be adding not just the million from last quarter, million from plus from this quarter, million point three from next quarter, million point, four, whatever it is. You're talking about adding millions and millions and millions of members with these strong margins, and the incremental margins on this company are going to be outrageous. I think Noto talking about, net 20%. This company could easily achieve net margins in the 30s easily over time as they scale. This is going to be a huge company. I've said this a lot of times. If you look at the growth, there are no down years. There are no down quarters. Look at the graph of quarterly. I don't have it pulled up right now, but look at the graph of quarterly growth on SoFi since it went public. It had two very slightly down quarters out of 20 some quarters. It's unheard of. It is absolutely unheard of for a company to execute like this. Why else do I love this company? It's the space. Banking is this huge, fat business that has never really been disrupted, never really been tested, never given consumers a fair choice, a fair shake. That's why people and the customers love SoFi. That's why the current members are buying more products from SoFi. That's why they're increasing their deposits just very, very rapidly. Looking at the chart, never dropped below 19. It was struggling here with 20. I was like, oh, let's hold 20. Started to come back. I was like, oh, we might hold 20. Nah, nah, not at all. We basically were holding our pud, if anything. But look at all these tests coming down to 19. I mean, what do you see? You see volume just coming in very, very heavily. On the way down, you're talking 60,000, maybe 100,000. And then when it gets to these lows, it kicks up to like 200, 300,000 shares in one minute tick. And then you have these, 9 million share orders. But every time it hits off these lows, you start to get a big candle. I don't think that scared the bears. I mean, I think they could have very easily pushed it under 19 had they chosen to do so. But I think their algo likes to do things a certain way where it keeps the volume in line, keeps as many sellers as they want selling. Unfortunately, that's going to be, us retail tiny wing pikers, but that's just the way it is. Great, great article. Just a few more data points if you guys are interested. Blackrock in a filing today increased their share count by 11% to 69.1 million shares. Why is that so important? It's because BlackRock does not lose. They are the dark masters of the universe. The force is strong with them. Yes, Vanguard is bigger, but BlackRock is more active. BlackRock is more, I would just argue they're more in the trenches actively trading, where Vanguard is more, index funds and that type of thing. I know they both do both, but I'm just saying, everybody has to stay in their lane. You can also look at CalPERS. CalPERS is quite influential. Tudor Investments increased their, strangled 3,500% increase on their call. I'm assuming they had a similar increase on their puts. Yeah, 3,700. California Public Employees Retirement System. This is a very influential institutional investor in terms of a lot of other pension funds and kind of tend to follow their lead. They had a period of time where they were very poorly invested, but they've come up quite a bit. Their average cost is 11.84 and they just added 12%. I think a lot of people are speculating, okay, they're trying to push the market cap down where they're not eligible for S&P 500. And then some bozo was on here telling me that I'm naive. I forget what his name was. Tim Chang, I think. I'm not sure. But anyway, it's astonishing to me how clueless people are. He's like, there is a rule for the S&P 500 that if you have diluted in the last 18 months, you can't join the S&P 500. I was like, hello. Every single company that joins the S&P 500 dilutes almost every single quarter. Nobody who's that young is just doing, share buybacks, starting to pay massive dividends. These are growth stocks for the most part, for God's sake. Tesla offering right before admission, Meta, Nvidia, all of them. Do you even understand what dilution is? Do you understand any increase in the share count is dilution? Stock-based compensation, offerings, there's all sorts of ways to dilute. Almost every company. So like people just say these idiotic things. And I'm like, can you provide some documentation for that? And he's like, you're naive. Just call S&P 500. And I called them and they said, you're broke. You don't own anything and you never bought a stock in your life. I don't know. I just don't like misinformation. I mean, I may be wrong often. I may be portly. I may have a face for radio. But I'm not going to lie to you. I'm not going to make stuff up, and I'm not going to pretend I know stuff I don't. That's why people are like, why don't you do a members area? Why don't you do an options class? Because there are people far more qualified for me that do that for a living. That's not what I do, guys. I'm a hammer swinger. This is like a side investing is a sideline for me. This isn't my job. This isn't my area of expertise. Just a big fat blowhard. Peter Griffin with less class. Anyway, guys, that sounded a little bit more like Woody Woodpecker. It's kind of off. Haven't had a Pawtucket Patriot lately. Welcome and hello, Nautilurker. Great Nautilurkers once again joined us. Clap my dog. I diluted with filtered tap water. There you go. What's going on, Ryan Sartell? Do you think SoFi will get pushed lower if we? I'm looking at the value. It can go lower. I'm never gonna say it can't go lower because it can go lower. I really don't think it. Here's the thing. At the end of the day, stocks trade on EPS multiples. And SoFi last quarter was at a 48, about a 50-cent run rate in terms of EPS. And it doubled during that year. Now, is SoFi going to double EPS again by next year? Say in Q1 they hit 14 cents. Does that mean they're going to hit 28 cents in Q4? Not necessarily, but I certainly don't think it's out of the realm of possibility. There could be new products this year we don't know about. What are they doing with all that capital? Are they just going to absolutely stoke the business and just grow the business that they have, put it on steroids? Are they having an acquisition? Do they have new business lines coming out? I mean, the growth of this business is absolutely extraordinary. This is a really good article by Prop Notes. Remember the other day when I was showing you that bearish article? They rate these bloggers. The bearish article, this idiot lady for SMCI who was saying, their only customer is OpenAI, and OpenAI is not going to be able to pay their invoices. I'm like, oh my God, I've never heard anything so stupid and disingenuous in my entire life, quite frankly. But if you look at Prop Notes on Tip Ranks as a financial blogger, he is number 115 out of 32,000, and he's number 119 out of 44,000 experts. His success rate is over 2/3, and his average return is 31. This is back-tested stuff, and you can see what he likes. He likes. It's not all one thing, Hood and SoFi. And people are like, well, you hate Hood. I didn't hate Hood. I don't hate Hood. They have great margins. They have outstanding growth. I think as much as I make fun of Vlad and his, VO5 hot oil treatments and his soul patch and his fancy little, shoes and whatnot, he kind of looks like Parker Schnabel from Gold Rush. Just polish up Parker Schnabel. You got Vlad. Have you ever seen Parker Schnabel and Vlad in the same place? I haven't. What about Tony Beats? Parker, go to hell. Hey, Tony, I was wondering if I can borrow some water off of your berm. Go to hell, Parker. Fuck you. I came over here from Scandinavia with my 12 daughters and nothing more. Go fuck yourself. You guys ever watch Gold Rush? It's pretty funny. What's up, Stockman Mark? I like those guys who just have that fat guy, Todd. He just had no idea what he's doing. And his dad, you're like, come on, Todd, get in here. You're like, what are we going to do, guys? And then they just pray about it. They're like, God doesn't want you to find gold. God wants you to help the poor. I don't know if you get that, but that's kind of, I don't know if you've ever read the Bible, but it doesn't necessarily say go out and mine. I mean, I'm not like saying they're whatever. It's just very strange to me. Very, very strange. Absolutely clueless. Just fuck everything up. But when a TV show is paying for everything, it's not exactly real. Yes, I do bank with SoFi, Sanjay's left foot. I also have Chase. I also have Bank of America. I also have Farmers and Merchants. SoFi, I actually put a bunch of shares back into SoFi because I was like, I'm just going to sell covered calls, and I'm glad I did. At least I've been recovering some of these losses we've had. I like that Aussie Opal mining. Yeah, I think I've seen that too. I gave up TV like 3 years ago once kind of the COVID pandemic ended. I just canceled my cable and I haven't watched TV since, but probably the best decision of my life. But I still watch YouTube and, like Netflix occasionally. But yeah, I use SoFi. I have SoFi for banking. I have SoFi. I use their travel. I buy life insurance through SoFi, through I think it's Ladder. I have SoFi Invest. I have money. I think I have like 7 products or 6 or 7 products of almost every product. So I have watched Moonshiners. See, that was funny too. Guys, I watched all this stuff during the pandemic because it's like, what else did you have to do? But just binge watch reality TV. My favorite are the guys who look for ginseng. You got any sign? They're just these like guys just running around the hills, shooting at each other, trying to dig up sign. You got any sign? My bar wants sign. You fill a garbage can with ginseng roots, and it's worth like a couple $100,000. It's fucking crazy. I guess in China they think it makes your tiny wing a little bit bigger, but it hasn't worked for me. I put a ginseng root in the Dark Star about a year ago. Absolutely nothing. Pucker up, Buttercup. Anyway, so my point was just rambling aimlessly. Oh yeah, dude, I love Deadliest Catch. I was on Deadliest Catch. Me and Deadliest Catch Chris. Better than what's that guy's real name? I have no idea. He's one of those big SoFi guys. Data driven investing, I think. Is that right? No, that's not right. I can't remember. Deadliest Catch Chris. He looks like he's kind of a nondescript guy, but to me, he just looks like a guy who should be on Deadliest Catch, like an angry rookie coming off of a drug problem. He's like, "We'll give you a chance." Captain Sig, just chain smoking. What is about fishing? Being a fishing captain just makes you want to chain smoke. Hildebrand, all the guys, they were all just chain smoking. I don't know. Ugh, can't stand cigarettes. The smell makes me sick. Yeah, that ginseng definitely puts the lead in the pencil if you go with the dark starfish. You know what I mean? You know what I mean? You don't want to take that stuff orally. Don't taste good. Take it the hard way. Haven't looked at the market since last week. Yeah, Emilio, it's been rough, buddy. I've looked at it every day. I wish I hadn't. Chris works for SoFi and has 9 kids. Jeez, are you serious? Guy looks like he's about 22. What is he, a Mormon? 9 kids? Jesus. Anyway, wonderful. Good for him. Hope all the kids are very healthy and happy. That's a lot. I need to find, yeah, Richard Von Gittin Jr. You're the drift champion of the world. That should be enough. But yeah, Walmart's looking for greeters. You get a side hustle going, Uber Eats, any of that stuff. Yeah, I bought a lot of shares today. Not right at the bottom, but I think I caught them around like 1940, 1930 on the way down. I didn't buy on those mini pops, little kicks. But going back to this article, just because it makes a lot of very important points, it's talking about how the blended EPS sitting right around 50. That's kind of been the historical average the last couple of years. And even if conservatively with the growth that pulls down to 40, if you look at the EPS growth, the stock is still going to go way up. I don't know how people are formulating these models of the EPS. It's just absurd. I mean, it's the same thing with CAGR. SoFi, what is it? 40% last quarter, 36% for the year. Something I can't remember these numbers, guys. Apologies if I'm a little bit off, but they're thinking somehow when SoFi is telling you the next 3 years are going to be 30% plus CAGR, and then they model for 18 to 20. Like, well, we're just going to cut the number in half, then take 10% off to be conservative, and then just, kick it straight in the balls, stuff it in a sack, and then we'll go with that number. It's like there's conservative, and then there's just sort of completely unrealistic. Is this company going to stop growing? Are we going into a recession? Is the market crashing? I think it's a pullback. I think it's a rotation, but I think software, SAS, and all these, Microsoft is just getting absurdly undervalued. Now, what did I sell stupidly to buy a lot more SoFi today? I sold some Tesla. I sold some Google. And I'm just I'm just much more confident in SoFi's valuation. I think SoFi has tremendous upside from here. I really think this is about a $37, $38 stock. Where do you find something growing like this that's this safe, that's this stable, that they never have off years, they never even have off quarters, that management is so far ahead of the game? It feels like, Noto and SoFi management team are playing chess and these other guys are just, banging some rocks together or something. I mean, you look at Hood. I mean, Hood earnings report wasn't that bad, but Hood is becoming a gambling website. Financial Education Jeremy made this point quite eloquently a couple of days ago. Hood is a gambling website. Hood is driven by revenues from extremely volatile retail investors who are largely investing in speculative, coins and stocks. And, these things can crash. And when the market goes down, they crash hard. So I'm not anti Robinhood, but their valuation, at 150 bucks is just absurd. I think it's honestly a pretty sensible buy right here, considering their margins and their growth. But it's like, where is that growth coming from? With SoFi, you see the growth coming in, lending. You see the growth coming in financial services. You see the growth coming in fee-based, lending platform growth. With Robinhood, I just really believe it's smoke and mirrors. If you get out of a sustained bull market and you have this down, recession, I think this is a company that could really, really be in serious trouble existentially. I don't think there's any secret sauce to what Robinhood does. And I think their business model is far too dependent on, retail traders losing money. Because I think that's basically what they do, payment for order flow. They're selling your information. They know what you're going to do ahead of time. And I would bet my left nut that in a down market, Robinhood traders get hurt a lot worse than SoFi savers. Now, the flip side of that coin is obviously they do a lot better, in a bull market. But you have to know when to get off the off ramp. You have to know when the market is slowing down and pivoting. Anyway, that's not really the point. Peers like Robinhood have seen their stocks fall precipitously on the rapid decline in Bitcoin and perceived risk from future Fed tightening. Shares of SoFi have also traded lower. That's pretty much an understatement. At some level, this makes sense. SoFi is a consumer-facing financial company that generates revenue from consumer borrowing, spending, investing activity. With markets selling off and the wider malaise we've seen in consumer sentiment, it makes sense that there could be impact on these core business lines. This risk has been compounded by the fact that until recently, SoFi was trading at a trailing price to earnings ratio of more than 70x. That's a frothy looking multiple, even in a frothy looking market. And you have to agree with that objectively. That is a very frothy multiple. In a recent article, I argued SoFi and its price were justified given the stock's long-term growth story. Now trading at roughly 50x blended PE, shares look even more attractive than they did previously, especially given the strong Q4 earnings report the company just announced. While some risks remain, blah, blah, blah. Now, with significant growth projected over the next 2 years, I expect shares of SoFi represent an unbelievable deal and could produce a much higher average return over the next 24 months. And he dives into the strong buy. Last 2 years covered SoFi 5 times, rating the stock a strong buy each time. My most recent rating, fall of 2025, was poorly timed. Shares fallen roughly a third since then. Investors in my previous ratings have done quite well, with buyers in my initial coverage making over 200% off of their investment. My coverage had coincided with strong financial performance from SoFi's underlying business, which has been a primary driver of returns the last few years. In case you're new to the stock, SoFi is best understood as a retail bank with robust one-stop shop model. The company offers checking, say, we know all this stuff, guys. We're going to kind of go on to the more of the analysis rather than just this explanation and training wheels. The company enjoys incredibly high net interest margins, higher than 5%, which is above big banks like Chase, Bank of America. And the company actually saw considerable growth in net interest income over the year. This is probably one of the most important graphs. It's very simple, but it's tremendously important to explain the durable competitive advantage. And to understand this, you have to understand that this part in blue, which is the dark blue, is the sources of funding as deposits for SoFi, their customers depositing money. This light blue area, this more SoFi blue area, is all other sources of funding, which I believe are mainly warehouse lines, but there's probably some other funding sources in that mix. If you look at the difference between these two, it's almost 2% cheaper to fund the business from deposits rather than from other sources. So look at where this went, guys. 2022, 57% of the business was funded by deposits. 2023, 78%, 24, 89%, and 2025, 95%. They have almost no reliance on outside funding. This is the self-sustaining economy that Mac and Dennis were trying to build at Patty's Pub when they invented the Patty's Bucks. Their problem was they didn't ask for any consideration. They just gave out the Patty's Bucks for free. They didn't understand the self-sustaining economy. They should have consulted Charlie, or at least Frank, Brian Lefebvre. At least they have some business experience. I would now, 25 Ghost, I would say no. Right here at 19, absolutely. If SOFX, existed like SMCX, and I was buying SMCX today again. But this is extremely important. Look at these net interest margins. They've actually gone up. Net interest margins have been basically flat the last 3 years, higher than previously. Now, more very important stuff. You can see the net interest income. This right out of the earnings report, guys. But this is very critical. Okay, if you look at personal loans, student loans, home loans, you see the growth trajectory. But you also see the loan platform business just exploding. 2024, $1 billion. 2025, $3.6 billion. So the fourth quarter personal loan originations were just barely higher than the loan platform originations, which are fee-based, capital light. They basically have to spend nothing and they just make money at incredible margins on this. So you have to watch this space and see how fast this is going to explode and see what other platform businesses they can basically copycat with that and mimic with that. I think they're going to be able to put together, there's plenty of loans they can't take, student loans, home loans, personal loans. I think they'll be able to lay off some of those loans too, but there's really not a lot of other companies even doing student loans. So these graphs really tell the story. I mean, for what where this company is going is toward a tech fee multiple. And I know those stocks have been getting hammered right now, but none of them are growing. Very, very few companies are growing at this rate and are priced like this. This is hyper growth, guys. Close to 40% growth year on year. EPS doubling from Q1 to Q4. That's only 3 quarters. EPS just doubled in 3 quarters, guys. How many companies can make these claims? I mean, I know like a Palantir, maybe a Hood, some of these other high flyers, but do they have this level of safety? Can they fall back on a lending business in hard times? I just see something that's just such a rare unicorn, which is this hyper growth with this ultra safe, diversified, increasingly diversified business model. Ultra conservative. Where do you see hyper growth with ultra conservative management, ultra conservative lending criteria, ultra conservative underwriting? You don't see it. These other fintechs rely on one thing. These other fintechs are one mistake, one economic event, one regulation away from extinction. Where SoFi is just, the deposits prove SoFi is gobbling up market share rapidly from other banks, whether they're regional banks, mega banks, credit unions. SoFi is winning. It's so clear from the data, from the trends that SoFi is winning. And if you get caught up in price action, remember that's exactly what people were doing before this huge run. Everyone, including most SoFi bulls, now not me, but a lot of SoFi bulls were saying, hey, it's a dead stock. It's not going anywhere. It's going to be stuck at 8 forever. And then all of a sudden the stock just catches fire and takes off. Because, they don't want you to expect what's coming and they don't want you to be positioned for what's coming. They want you to sell the dip and they want you to smell the rip. Not a lurker. We're not getting any subscribers. What's going on, Alberto Berti Aviles? The best wrench in the business, perhaps outside of the great Not a Lurker, but he has more hair, so I'll give him that. Bobby Joe, couldn't help myself. I'm like 40% in SoFi. I still bought 2 more leaps after running a metal detector in the 50 close. I know, Bobby Joe. I'm getting way over allocated to SoFi. I was already over allocated to SoFi, and I bought thousands of shares today. So could be a huge mistake, but I don't think so. I like my chances. Should I convert my 10K shares to SoFi 2X ETF to speed up some growth? My average is 590. I wouldn't. With an average of 590, I think you got plenty of upside from here. But if the stock does make that move down to 14, I would rather you lose, that 20 more percent than 40%. That it's very tempting to go, increase your leverage, increase your exposure to leverage, just completely lever up. I don't, it's very hard for me to answer because I don't know your financial position, your age, your risk tolerance. I just feel like for the most part, SMCX I'm pretty comfortable with because I just believe there's only upside there. I believe that's a Fugazi scam stock, and I think market makers know it. I mean, they're talking about modeling for $1.73 when they made 70 cents last quarter, and they're looking at similar sales next quarter. So what, 40 plus 70 plus 70, and they're going to make 0 cents in Q4 with accelerating growth. And they're talking about margins getting better. Now, talking about it's one thing. Talking about now actually doing it's something else. Um, the acceleration, these net revenue, I mean, these graphs are just incredible. Net revenue, 88% net revenue year over year growth, 208% non interest income year over year growth, 36% net interest income year over year growth. Contributes, just look at them, guys. Non interest income includes fee based revenue generated primarily through loan platform business, referrals, interchange brokerage. These are deposits and credit card loans. So while this number is still not higher than this number, that's only because the dark blue is growing so damn fast. I don't think SoFi even thought they were going to be this good at lending. But it's the same thing. It's discipline. It's not going after the whole thing to pump EPS in 2022. Like, why aren't they lending more? Why aren't they pushing harder? Because Anthony Noto is smarter than you. He knows more than you. He's better looking than you. He has more windbreakers than you. He has better hair than you. He's just better than you. And he's better than me. God's sake. Oh. Anyway, I don't know what the hell I'm talking about. But I bought a ton of SoFi today. I'm looking at the trends in the business. Where are you showing me the only argument they have is valuation? The multiples are frothy. Fair enough. But it just pulled back off of 32.50 to 19. What do you want? That's like what, 43% or something retracement? I wasn't expecting 40. I thought it would retrace about 30%, to be honest with you. Am I on mute? I'm not. Wow. Oh, friend's son just signed a $15 million contract in the NFL. Amazing. Congrats. Let's see, products in thousands. Additionally, it's important to note the long tail nature of banking relationships, but these are sticky relationships. These aren't like Robinhood customers that can just jump to another credit card, to Webull, wherever they want. You know, Fidelity, Schwab. SoFi's customers aren't going anywhere. People don't switch their primary bank, and SoFi is becoming a primary bank to a lot of people. SoFi will likely enjoy incredibly low member churn, which makes the company's long-term economics incredibly attractive. The bottom line in Q4, SoFi produced operating income of $185 million, an all-time high. As operating income continues to trend up and to the right, powered by strong member acquisition, great net interest margin, and accelerating fee-based revenue sources, I expect the stock will produce continued returns above that of the broader S&P 500. Now that brings us to valuation, and this is the main criticism of the stock. The shares are trading at roughly a 50x blended PE. Since turning a profit midway through 2023, the company has traded an average price to earnings multiple 53.3. Obviously, compared to its peers, a P in the 50s is incredibly expensive and much more in line with high growth tech companies, which I would argue SoFi is a high growth tech company. Additionally, when compared versus the S&P 500, which trades a blended P of 25, SoFi is roughly twice as expensive on a dollar for earnings basis. Looks like a clear risk for market watch potential investors. However, analysts are forecasting significant earnings growth over the next 2 years. Right now, consensus estimate puts SoFi's earnings per share growth at roughly 54%. And that's extremely low. It grew 100% this year, in 3 quarters. And I know that's not going to continue at that rate. I'm not that naive, no, despite what some in the comments would have you believe. And roughly 35% year over year growth in 2027. This means earnings share could expand from 39 cents, which they ended 2025, to roughly 81 cents by 2027. I think 2027 SoFi is going to earn way over $1. I think they're going to earn 80 cents this year. I think they could earn very close to 80 cents. I know people think that's crazy. They're like, no, 60 cents is the maximum. How can you make a projection 33? Because I just say things. I don't have any models. I'm not plugging this into AI. Just spouting off the cuff. Just jaw jacking. Um um sorry guys, I'm getting a bunch of text. So much crap going on. So much stuff breaks. Everything I touch turns to shit. However, analysts are forecasting significant. I just talked about that. Similar earnings per share could expand to 81 cents at end of 2027. If the valuation were to remain roughly 50 times earnings, SoFi could appreciate roughly 98% or more over the next 24 months. So you're talking about, a double up. However, if as the market opportunity for SoFi matures and the law of large numbers causes some deceleration in growth, I expect that shares of SoFi could be valued at a multiple closer to 40 times EPS. Obviously, this represents 20% valuation contraction. Even in this case, the underlying organic earnings growth has the potential to boost shares by roughly 55% over the next 2 years. So, I know that would be disappointing to some of us to go back up to 30 over the next 2 years. I don't think that's going to happen. I think the top case is far more likely than that. I think actually earnings is going to continue to accelerate EPS. Let's see, what the hell else was I talking about? It's a bunch of numbers, bunch of math. I don't do math. I don't do math. I don't do numbers. If I can't get it on me 10 fingers and me 10 toes and me willy, it's higher than 21. You're bust. That's how I do math. It's like blackjack. I only got 21 appendages, phalanges, veners. Personally, I believe analyst estimates using this. I've been talking about this till I'm blue in the face, guys. This is the understatement of the year. I believe analyst estimate used in this calculation are conservative. They're not conservative. They're completely fucking unrealistic. Okay? It's just, why don't people? I mean, Noto was kind of calling this out. By the way, guys, kudos to Tanner and also Tevis. Noto interview was outstanding. I love Noto in a less formal setting where he can just be himself and kind of go after people, going after some of these hack analysts. Now, another thing I was just going to point out while I'm, let me finish this article. Could produce stronger than expected growth, keep the valuation at a buoyant 50% multiple. I think that it could even go higher because what really matters is EPS growth. And that's where you get into these insane incremental margins because as SoFi adds new members, they cross sell, they really don't have to add any costs. Let's see. Sorry guys, I gotta just send a quick text. I know I should put myself on mute or something so you can't hear me think. I even sound fat when I think, even when I'm not making just wheezing. My turkey neck. Gobble gobble. So that said, even with conservative assumptions, SoFi still remains primed to deliver excellent mid-20s returns. For that reason, I view shares of SoFi materially cheaper than they first appear, and I am reiterating my strong buy ratings, risk, valuation, competition, fee sources like payment for order flow, commissions, partner vendors, interchange revenue will likely remain relatively stable over time. So I don't know. His risks seem pretty positive. It's like, what's your worst quality? It's like, I'm just too handsome. And I'm very humble. Overall, though, I view shares SoFi as a strong buy at the current price point, given the recent sell-off, Q4 earnings reports, and continued growth trajectory. Even with potential multiple contraction, there is a significant opportunity for appreciation at this entry point. Hence my rating. Cheers. Cheers to you, prop notes. I want to make another point with regard to valuation. And that's that this is now trading below where even most of the most bearish analysts have it. I mean, granted, Midwest Values with the bolt-on head from Morgan Fudley, he's still at 18 in a sell. Fair enough. But look at these other bears like Mahir, who, Bank of America, who was instrumental in crashing the stock. Now the stock's trading with a 3.6% upside, but he's still a sell. Even old touchdown Timmy Switzer, former member of My Chemical Romance, before he went into investment banking with KBW. KBW is the biggest, SoFi bear of them all. They always make a downgrade and then the stock just happens to crash. Everybody's just got their finger on that sell button. When touchdown Timmy Switzer says jump, they say how high. He's got 3.6% upside on the stock. Why would you have a sell? I know I don't expect them to come out and re-rate. If anything, they'll just lower their price targets to, wag the dog. The twig is wagging the berries, as it were. Goldman, a hold at 24, 25% upside from these levels. Citibank, 91% upside. Jeffries, 81% upside. Mizuho, 96% upside. And I would say TD Cohen, they've been bearish the stock forever, 24% upside. UBS, the Chode. I love the Chode, but 26% upside from a bear. They have outrun the coverage. The sell-off has gone too far. I hope retail buys up this whole company. It doesn't sell a share to $100. Let Anthony Noto lead us through the desert to the promised land. Absolutely not a lurker. Not a lurker is not going to sell. Those colors don't run. Those colors don't run. I'll sell SoFi the day not a lurker, shows up with a full head of hair. Sushi Chef Investor LLC. Okay. Sushi Chef Investor LLC. Bought back some Enphase, SoFi, and Hood with gains from Enphase. Can't wait for SoFi to rebound. Me neither. Big Beard. So we're just repricing until new Fed chair. Big money takes profit, gets to buy for low. The next gen tech explosion with tokens. I don't know if tokens are going to be the explosive driver of growth. I think it's more the fee-based revenue, the EPS growth from the existing business. The synergy in the existing business is insane. As this cross-selling accelerates, customer acquisition cost drops, stock-based compensation, all these costs drop relative to the revenue and the profit. I think EPS is going to grow a lot faster than even the bulls are modeling. It's just a feeling I get deep inside my duodenum, my Cossacks. But yeah, so the good analysts, the ones who agree with me, they have anywhere from 50 to 100% upside. The bears, the most bearish analysts, have anywhere from 3 to 25% upside. Does that make any sense? I don't know. Look at the chart a little bit more. That's not a good one. Let me pull out here. So you see, this is very similar level. It bottomed out here like 1919, bottomed out today, I don't know, 1906 or something. So this is a little test, a little pump and dump, and not for nothing. This is more how stocks should sell off right here. Even though it's a waterfall, stocks generally don't sell off just once in the morning and then trade horizontal. Sell off all at once and then trade horizontal. Sell off all at once and then trade horizontal. This is indicative to me of a lot of accumulation through these horizontal periods. And these are the prices they wanted. Trust me. You say, well, why would market makers accumulate right here at 2150 if they know they're going to take the stock down to 19? Well, why would market makers buy all that offering at 2750 if they knew the stock was going to pull back significantly after that? It's because they're buying the fundamentals. Don't you see it? Keen's Tam sees it. He ordered the AG1 supplement. I hope it helps with the gut. I hope so too. You don't look like you have a gut. You got a pretty svelte guy. Oh, I tried to staple my own stomach. I was just pounding swing lines into it. It hurts. It hurts. It's not what you mean. It's inside the body. You have to do a surgery. Oh, I was driving staples into my gut belly, getting me nowhere. Does this represent support? Remember, I said there's no support on the chart until 14, 15. Say honestly, it's 1482 is where I'd put it. Are we going to go down there? God, I hope not. Is it possible? Absolutely, it's possible. Market falls apart, recession. NASDAQ down 2 points today. It's not pretty. It's not pretty at all. But I think market makers, when they sell it off very, very quickly, shock and awe, they algo hold it horizontally. It's got to be accumulation. Otherwise, why wouldn't it just keep steadily selling off all day? It doesn't make sense. Does it? Or does it? I don't know. I'm not very logical or smart. So Market makers are that's all they're doing. They're picking off retail one by one because they don't care if it goes low. Their ego, their, self-esteem is not invested in price action. It's in the end results. It only matters where you buy and where you sell. We cannot drive the bus, therefore price action should not upset you. Keep your eye on the prize. I mean, another guy in the comments was like, "Oh, I bought at 28. I'm such an idiot. I can't tell anybody." No, you're not. You're golden, buddy. Don't beat yourself up. I was buying some shares at 28 too, very few, because I was so over allocated. My average is so low. Now, lower 20s, I'm very comfortable buying huge blocks again. Like I was, when the stock was in the fours, buying blocks in 10,000s, 20,000 shares at a time. I don't give a fuck. You can't convince me this is a bad company given the trends, given the growth, given the fundamentals, given the data. I am an evidence based investor. Don't tell me, show me. Don't tell me, show me. I mean, there's a guy, I don't know, you guys probably know who he is, named Steve Bannon. Now, whether you're right wing, left wing, that's not my point. I'm not saying, I'm endorsing his views or anything. I would be very curious to hear his Epstein interview, because I know he had like 12 hours of raw, uncut tape with Epstein. I'm sure that, FBI and all those folks are filtering through it, but I don't think it's been released to the public. In any case, he uses a phrase a lot, or he used to say signal, not noise. Now, the way he was using it, I think was, a little bit disingenuous. Like, I'm not left wing, I'm not right wing. I used to be kind of center right, but I think it moved so far. Now I'm just like center, which makes sense because I've got a very bulky center. Got a nice base. My body type is grimace. I don't mean that as in grimace in pain. I mean grimace, that big purple monster from McDonald's. Very grimace type body type. My best buddy is the Hamburglar. Ronald McDonald had some weird friends, man. Just a big purple gumdrop. Hey, it's my buddy Grimace. Okay, I'm buying it. Anyway, I have no idea what I'm talking about here, guys, as per usual. But I don't know. I like support in this area, this 2150 area where it kind of had some meat here. And you see it was trying to go back there. This little 5-day dipsy do middle finger pump and stump, fake sell off accumulation, fugazi, whatever you want to call it. I'm just rambling and repeating myself at this point, but what else is new? And all these guys I really, respect on Seeking Alpha. Some of the guys I follow and look at. I mean, the strength of SoFi is really speaking for itself. I mean, you don't have to do this. Is where you go back to a guy like Luke with Stealth Wealth, and he's like, same thing, signal, not noise. Tune out the noise, tune out the narrative, tune out the subjective, and go back to the data. First principles, as Hannibal Lecter would say. What matters is the results, is the numbers. What people say about it, that's their own. I can say what I want. Anybody else can say what, but look at the numbers, look at the data, look at the trends. I mean, and not for nothing, but this company, these auto-generated articles from this, what's that company? I forget now. It's one of these stupid, really, really stupid, Simply Wall Street. Simply Wall Street, these articles, I could see why there's like, naive idiots are dumping. Sorry if I have my noise on here, guys. They they're like, okay, fair value, $14, overvalued. They're like, absolutely nothing input for the growth. How do you not value the growth? What is GARP? I mean, these valuations are so incredibly subjective. I'm on mute. I keep getting paranoid. I'm like, I assume some of you would have told me. Yeah, Luke is so grounded and just he's not hyping. He's just telling you what it is. He's like, this is the numbers. This is what the company's doing. This is why I trust management. Because I'm looking at objective reality and I'm analyzing evidence. I am an evidence-based investor. Don't tell me, show me. Signal, not noise. Data, not hype. Data, not FUD. Thank you. Not a lurker on the bat phone telling me I'm not on mute. I can look over there and see if it's red. But anyway, these auto-generated Simply Wall Street articles just bashing SoFi valuation day after day after day. Excess returns analysis. Result overvalued. The stable book value is $8.85. Intrinsic value is $12. Result overvalued. All their results are overvalued. Price to earnings, result overvalued. Fair ratio is 26. It's double the value. I mean, so it's worth like basically the same as it was when they introduced the SPAC. So you get nothing for, multiplying revenues from, whatever it was, 300 million to like 4 billion, 4.6 billion coming up next year. Anyway, Luke sold most of his Tesla. Makes me feel okay when I was selling Tesla today to buy SoFi. Yeah, no, and to Luke's credit, I was one of these guys when he said, "Hey, SoFi's made a huge run up here. It pulled back off of 32. I think it was like 27." He's like, "I would take some profits." I was like, "Oh, Luke, you don't know nothing. You're bald. You look like a rock climber. You're so vascular. You look like you're always flexing to try to make your arms look bigger." I don't know. Just got a lot of tension on those biceps. Just flexing it up. You know those guys who wear muscle shirts and just stay in a constant flex. I would suggest Luke is like a professional rock climber, astronaut, motocross rider, underwater welder, fortune teller, sleuthsayer, prognosticator. Anyway. Yeah, he's just somebody you just listen to him and you're like, this dude is logical. He's honest. He's telling you what he really thinks, and he's right a lot. So that's a guy maybe you should join his shit. Don't pay a fat guy. Pay a guy who's vascular. Like my P90, like my boy P90X who's on here. It's not as ripped as Tony Beats, but few are. Tony Beats is in great shape. Beautiful head of hair. I think he uses those same VO5 hot oil treatments as Vlad. Get over here, Parker. I need you to help me with my containment well. You're like, well, Tony, when I asked for your help, you told me to go fuck myself. You're like, I know I did, Parker. I know, but I really need your help. I need 5 pounds of sturgeon caviar. I need some lutefisk. My wife needs a new set of crochet needles. Come on, Parker. They're making a $30 million clean out over there. I can't get a nut to move my butt. I'm just a squirrel. I got to really work on my Tony Beats impression. It's not that good. It's hard to talk when your whole mustache, you have like 3 inches of mustache in your mouth. Me, Mike? No, I purchased shares today, and I'm just gonna hunker down and sell calls, and then I'll sell them a little, out of the money, obviously. But if I get called away, that's okay because my share count's just way, way, way too high. Bought SoFi shares. Excellent, Frank. H. Frank, good on you. Thanks, Ghost. I appreciate it, man. You big shirtless guy. What do you? I don't know if I can respect that, Ghost, because though your pecs look a little bit too firm for me. I'm more of a man boob dude. I'm man boobing for fun and profit. I made man boobing into a verb. Looking like you might be doing a few too many bench presses there. Relax, buddy. Don't try too hard. Making the rest of us with man boobs look like shit. Thanks, Ghost. I appreciate you, man. Appreciate you commenting and everything. Thanks, guys. And I don't want you to like. I don't want you to subscribe. I'd much rather you comment, have some fun with it. I ain't doing this for money or for clout. I don't care. Like, oh, you're an idiot. Like, tell me something I don't know. I have been living my entire life as a doofus, idiot, chunky monkey, and somehow I still continue to succeed. Now, am I going to die of a massive heart attack in the next couple of months? Probably. Am I trying to avoid that? Absolutely. Have I quit all my bad habits? Yes. Am I walking 6 miles a day to work? Yes. Am I trying to do 100 push-ups a day? Yes. But I have to do a lot of them on my knees because I can only do about 10 real push-ups at a time. But I weigh 330 some pounds. Ever since my weight loss journey, I've lost no weight. I haven't gained weight, and I put on a lot of muscle, so that's a good thing. So I'm also doing like a couple hundred squats a day. And when you're this fat, you don't need any weights. It's hard enough, you know. Deep squats. You got bad knees, bad ankles, bad hips. I got bad abs, bad elbows, bad fingers. Call me Bobby Badfingers. Remember that character from the Howard Stern show, Bobby Badfingers? Some random guy who just like clicked with his fingers. Who are your favorite Stern characters? I mean, I haven't listened to Howard Stern in like 25 years, but when I was in college, I really enjoyed it. There was this one guy, the world's most well-rounded, talented man. He kept challenging Howard Stern to this like it was really weird. They had I don't know. I love Bigfoot, Crackhead Bob, another favorite. Hank the Angry Drunken Dwarf, huge favorite. I don't know. A lot of great characters. Stuttering John Melendez. Huge Jackie the Joke Man Marling fan. His new album, Hot Dogs and Donuts, available now. Oh, yeah. I used to be such a big Stern fan back in the mid 90s, and then I just totally lost interest. Just wasn't funny to me anymore. I don't know. That's kind of how I go with things, though. One day I love it. Next day I'm like, move on to something else. Anyway, check out Go institutional ownership again. Sure, why not, Bobby Joe? I got nothing better to do. Let's see. Go. Oh, grocery outlet. Interesting. I actually love grocery outlet. You get stuff really cheap. Institutional ownership is only 146%. So you have to compare that to insiders. So there's going to be a very high 2 point. See, I don't know. They're misclassifying things. Was there a split on the? I forget. We talked about this before, Bobby Joe. I do remember that, but I can't remember what the hell we decided. Sometimes it's actually useful to go to Yahoo because I think the way they do this sometimes is actually more accurate. No, not in this case. 143% of the float held by institutions. I was trying to explain why this happens last time, but I'm not sure if I was able to do that adequately. But as far as institutional ownership, a good way to look at this is instead of looking at just that top number, is actually to look at the filings. So FMR LLC increased their share count, and FMR LLC is somebody you want to watch. They make money. T. Rowe Price also increased their share count 53%. Vanguard, 10% increase. BlackRock, and these are all the 13G filers. BlackRock increased their share count 16%, and FPR Partners is the only one who did a big decrease. I don't even know who that is, to be honest with you. Bryn Mawr Trust is in for 1,000 shares. Big baller, big broke ball. State Board Administration Retirement of Florida, they're unchanged. So these are all your newest filings, Bobby Joe. But if we just drop it down by share count, we drop it low. A lot of these filers, there was a newer filing from FMR, which you saw. But a lot of these filings, BlackRock, small increase, which is really good news. Vanguard, small increase. T. Rowe Price, huge. Oh, that's an older one from November. That's a really old filing. Looking more for new filings. Dimension Fund decreased by 10%. Van Burkum and Associates, I'm a partner there. They increased by 2%. Morgan Fudley. Oh, this is an old filing from last quarter. Looking for new filings. Clearbridge Investments, 6% increase. UBS, this is kind of consequential. UBS with an 87% increase in their share count to 2.7 million. So yeah, it looks like from what I can tell, on balance, institutional investors are increasing in this. All the big boys are increasing now. This is looking a little bit sketchy because how did institutional investment move down this far and then had to be some kind of stock split or big offering or bankruptcy or something. I don't know. He's the guy that started XPO, United Rentals, and United Waste. Who is that one? That company? I didn't know what it was. Okay, good info. Thank you, Stockman Mark. I do appreciate that. For you guys filling in my mental gaps, which are quite some familiar. Were you familiar with QXO and Brad J? A little bit, Stockman Mark. I have not had time the last few years to study the market and study different names like I would like. I'm working absurd amount of hours during the week. Just absurd. I mean, I start working on different stuff like 4 a.m. and I might not be done till 11 at night. So I wish I had time to dive into all these names, but I can't right now. Um, Lots of in phase. This guy, okay. Eric the actor. Nice one, Ryan. That's great. You think SoFi can get an S&P 500? I absolutely think they can get in this year. Now, the minimum market cap as of last year was like 22.7 billion. They're kind of coming dangerously close. They lose another 10% of their value, they're going to be dipping below that. But I really think the stock is going to bounce from here. But it depends on the overall market. And SoFi is not a company that can buck the market, no matter how good their results are. They're going to get dragged by this pull down Robinhood, Upstart. All these other companies are just getting absolutely hammered. They're dragging the sector. They're dragging software. They're dragging the sector. Even, the big mega banks have pulled back a bit. I think JP Morgan, 10% off the high. Bank of America, not even 10% off the high, maybe. But those companies make a ton of money. They basically print money because no one like SoFi has disrupted these bastards. They pick your pockets with impunity. Anyone in chat follow QXO? I'm sure they do. I was actually looking at this stock not that long ago. So to acquire Kodiak, 2.25 billion. What do these guys do? Jay Bizzles. My understanding is that holding the 1922-ish level of SoFi is very critical. I bought Leafs this afternoon. I mean, support from 5 days ago. Why is it so critical? Just in terms of S&P 500 inclusion, or where institutions were buying, or vis-a-vis the offering, or some type of stock options, compensation, cash out, target. I like the level, and I think the level, I don't think retail's selling here. I think institutions want to buy retail shares here. Remember, guys, institutions just bought up almost $2 billion of SoFi at 27.50. And the only reason you buy an offering at 27.50 is because you believe the stock is worth significantly more than that. You don't buy an offering at 27.50 if you think the stock is worth 27.50. You would have to think it's worth at least probably 35 to splash out on that. Watched a different type of U-turner video where this guy went crazy deep on the chart and cited that level in the chart. Oh, okay. Some technical analysis. Gotcha. Above my understanding. Me too, Jay Bizzle. I'm a caveman charter. I just look at simple things on the charts. I'm like, okay, it's bounced off this level 6 times. That's clearly where they want to buy. Market makers don't bounce a stock off the same low 6 times because they want to sell there. I mean, it's just basic idiot logic. No, I walked 3 miles each way and it's flat, Carl. That's the truth. 6 miles total. But that's a lot for me, bro. I mean, imagine carrying a 150-pound sack of shit on your back. And then you got my life story, You don't want to walk a mile in my shoes. They're stinky. They're worn out. Sometimes Princess J has to throw my shoes out of the room. Outside. Yeah, I'm so stubborn, guys. I'm not moving off of this stock. I am not moving off of SoFi. I am Team Noto 100% for life, or until, he fucks up and my thesis changes. But I don't see it. This guy is so dialed into this business. He is so committed to this business, and he's fucking brilliant. You guys know that that Noto was top of his class in engineering at the United States Military Academy. I love the fact this guy is a trained engineer and not some, lawyer finance hack coming out of a fraternity with frosted tips. This guy's a military officer. Great football player, linebacker, fill in the gap. I was going to make an off-color joke like Mrs. Noto says he's incredible at filling the gap. I don't need to drag the show any further into the gutter. It's already in the sewer. Sorry, Sanjay. I can't read everything. I'm illiterate. Don't you know that? Okay, what did you write? Sanjay's left foot. Where? I don't know what the hell you said, Sanjay. Poco, SoFi is zero risk with a 3 to 5 year timeline. And I'm not only going to read what you wrote, I'm going to put it on the screen, my man. Were you the guy who's 24 or something who wanted to come on the show? I think that might have been you. Yeah, I'll have you on. I don't care. My criteria for having someone on is they're willing to come on. Don't you talk about my man boobs though. Mention my man boobs. I'll throw you right off. Not a lurker. I'll work you over, take you out behind a dumpster, shave your head. Yeah, you're right. It's not only zero risk, it's guaranteed upside. I've never seen a relatively small company that has almost 100% chance of becoming a huge company. That's the way I look at it. Now, I know it's not 100%, but I'm just being, hyperbolic. It's puffery, guys. It's puffery. I'm trying to make a point. Okay. What is that point? I have no idea. Somebody's like, do you want to take the edge off? I'm like, I have no edge. I'm all round. I need an edge. I need something chiseled. I can't remember last time I saw an ab. I kind of have a little bit of scarily, a little bit of like upper abs, even though I'm fat. My lower abs just a big blob of shit. I don't even know if they're in there. Hello, lower abs. Hello, hello, hello. Please, we can't breathe behind all this blubber. You should make soap from this. My lower abs sound like a French criminal. You seen the film Ronin? Watch that Robert De Niro movie Ronin. I can't decide if I like that movie. It's so weird to run it all around. It's a good car chase, really good car chase. And they're in some French cars, like a Renault. Would you like to buy a used Renault? Renault, thank you. I can't get parts. It comes with a wheel of cheese. Like, oh well, okay. I'll buy the cheese. I'll buy the steak and the sizzle. They call me Mr. Cheese. Let's see. What's up, Sushi Chef? That's a great point. I have no idea which point. He bought Beacon Roofing last year. I got to go back and read these comments after because it's so hard to follow. Yes, Katie, it has been incredibly good for me, but it's making my knee, my foot. My foot's broken in like 8 places. I've been walking around. I went to a podiatrist. She took X-rays of my foot. She's like, "How are you walking around?" I don't know. Just too stupid. Then she put me in one of those boots. Like those things made my knee go bad, like walking boot. And then took it off and my foot felt better for like a week and then all the fractures just fractured again. It's idiot logic, but idiot logic is my specialty. All right, we got you in there, Sanjay. I'm going to leave you on the screen because I completely agree with your point. It's a gross valuation if a beat and raise management team just hits the goals they're setting out. I want to buy SoFi, but I don't want to sell SMCI shares while they're low. Yeah, but it was really hard for me to decide what to sell because I didn't want to sell Google and I really didn't want to sell any more Tesla. But like I said, I'm an evidence-based investor, and more importantly, and kind of similarly, I'm a valuation investor. I don't care what it is. If it's grossly undervalued, I'm going to buy it. And right now, I believe SoFi is grossly undervalued. People are like, oh, it's pulling back toward a fair value. It left fair value a long time ago up in the 30s. Guys, there was buying pressure on this stock in the 30s. I'm telling you, they stepped on this thing. It was all pre-done. If that ER causes, and I know it's sector, I know it's overall market and all that stuff. It's not the actual results of the ER. But like I said this years ago when I was doing these videos. When you have great results and the stock sells off, it doesn't mean bears have won long term and bulls have lost. I would argue results are far more important than price action over the long term. Sorry, guys. Oh, sorry, guys. I'm still I'm talking to somebody about a closet door broken. It's amazing this stupid, trivial shit you have to do when you're property manager. I've cleared more toilets. I've cleared so many toilets. Just so gross. I am probably one of the best people in the world with a toilet auger, a rigid toilet auger. I have worn those things out. The worst thing is some like little tiny tenants, little ladies, she's like, "Oh, my toilet's clogged." I'm like, "Oh my lord!" What have been a chili cook-off? Um, Shout out to Katie, indeed. Let's see, guys. Sorry, I forgot what the hell I was talking about. Thinking about too many different things. But anyway, this thing is just, I don't know. I think it's a no-brainer. I was reading an article on Microsoft today saying I think Microsoft's a no-brainer. Those would probably be right now my one, two, three: SoFi, Microsoft, SMCI. SMCI's margins are going to improve. Those margins are not going to go negative. You think Dell and HPE want to sell, $10 billion data centers at a loss? They can't compete. Let me tell you this: Dell and HPE cannot even function on a 6.6% gross margin. They're so much bloat, they're such dinosaurs, they'd be out of business. But the Wigger gets it done. Anyway, guys, talking QX. I'm going to study this a little bit more because everybody's been talking QXO. I've heard this name quite a few times, but I don't know. I don't know enough about it to intelligently comment. Looks like a lot of earnings beats. Huh. New company. It's nice. I like it. Have to look into this one. Analysts like it. I'm just curious. What do these turds think? I know analysts price targets or not. Don't get me. Don't go. Oh, you just listen to analysts. I just use it as a data point, guys. I look at all kinds of data points, and for me, it's not what do analysts say overall, but what do specific analysts say. Analysts really love this thing, and these are some good analysts. I recognize quite a few of these names. I see people from TV. Not to say again, people who get on TV are necessarily the most brilliant people. This guy I recognize for sure. Who's he with? RBC. Yeah. He's on CNBC and stuff all the time. Ruben Garner. Okay. Yeah. So analysts love it. 30% upside. I don't know. Got to take a look. Anyway, guys, short interest. I think it was mostly neutral today. Still hovering just below 9%. Yeah. Really no action there today. Any filings or anything? Anything interesting going on? What are you guys doing for Chinese New Year? SoFi Hong Kong and OSL joined forces to create the all-in-one investment app. What the hell is this? What is this? I didn't even see this. SoFi Hong Kong and OSL joined forces to create a PR newswire. This guy sold some shares, I think. Some insider bought shares, some other insider sold shares. You guys know about this? Have you heard of this? Jalen, have you heard of this? You know about this one? Let's see. Let's see. A fintech growing company offering all-in-one investment app to help members get their money right. And OSL Group, Asia's leading regulated digital asset platform, today announced a strategic partnership to bring digital assets trading to Hong Kong investors. Okay. Um, Hong Kong's a very rich place, by the way. A lot of people invest there. SoFi members can now trade a select range of supported digital assets directly within the SoFi Hong Kong app. Let's see. Um, Yes, another shout out to Katie. Sorry, I already read that, but Katie is worthy of multiple shout outs. Um, so another shout out to Katie. What? Let's see. Um, the hell's going on here? People texting me when I'm on un poco mossing. Everybody wants to trade a moment like this. If you're seeing issues elsewhere today, SoFi crypto is operating normally. Buy, sell, hold crypto and SoFi up. Nice. SoFi selling it on X, Twitter, whatever, shitter. Powered by enterprise-grade technology, the new service is backed by OSL's Omnibus Pro, a solution tailored for brokers and banks. Through the partnership between SoFi and OSL, through its Hong Kong licensed subsidiary, OSL Digital Securities Limited, SoFi Hong Kong integrates market-proven infrastructure to handle trade execution, custody, and wallet management. This means SoFi Hong Kong members will enjoy a retail experience while their assets are protected by security standards used by regulated financial institutions. Partnership combines SoFi's member-first philosophy, OSL's technical firepower, removing the barriers investors often face when managing money across fragmented platforms. International expansion, guys, granted on a small scale, but this is critical stuff. SoFi Hong Kong members now trade digital assets alongside U.S. stocks, Hong Kong stocks, and access to robo advisor, all within a single app. Diversifying portfolios now more streamlined with no need to switch apps or move funds between platforms. Regulated and secure licensed corporation. So you guys get the idea. Annie Locke, vice president, head of SoFi Hong Kong, said, helping our members realize their ambitions and giving them total control. We're excited to offer our all-in-one experience that removes the friction of fragmented accounts, granting members immediate access to regulated, intuitive virtual asset trading experience. Partnering with OSL was a strategic choice that allowed us to deliver this elevated experience. We are proving that compliance and innovation go hand in hand, empowering our members to achieve financial independence. Eugene Chung, chief commercial officer of OSL Group, said, partnership between OSL and SoFi represents a significant step in the digital asset industry's continuous effort of embracing regulation, ongoing journey from the periphery into the mainstream financial ecosystem. Once again, validates the superiority of OSL's Omnibus Pro in terms of security, compliance, institutional grade infrastructure. We look forward to deepening our collaboration with SoFi to explore further synergies and institutional service asset management beyond the digital asset race. About SoFi Hong Kong. And you guys remember we used to talk a lot about this. People like, oh, they have no international presence. We go, well, they have a subsidiary in Hong Kong. But we don't, we all just get our schlang in our hands. That's all we got. That's your international expansion. But that could be very, very significant to allow this streamlined one-stop shop for investors in Hong Kong. If you break into Hong Kong, the next move is mainland China. Let's be honest. If SoFi gets a foothold in China, that'd be incredible. Now, probably the government's not going to let them in. So Hong Kong's still this sort of semi-autonomous, deal when it comes to the economy. When it comes to culture and laws and stuff, it's very much China, but still kind of, it's kind of one of these hybrids. Like a Toyota Prius. Guys, I have been talking for an hour and 17 minutes, which is just absolutely ridiculous. I don't know how anybody could listen to this shit. I think TJ is still in it. TJ, the wheel deal. What's up, the great Billy Jack? Billy Jack and the Butt Crack Boys. Front man on the job. Boom, 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 boom. Yep, the Tiny Wing team is hanging on by a thread, hanging on by the tiniest wing. Yeah, 50% retrace. I mean, Billy Jack, we're almost there. It's only like 1650. I hate to say it, but man, I called out that support at 15. I wish I didn't do it. Yeah, I think people were buying Enphase at the wrong time. Really screwed up people as they were paying the interest rate game. That's only what they were buying it. Man Boobs McGee. Yes, indeed, Brooks. Stockman Mark. Copal as well. You guys are talking to each other. Phone premium. I love you guys. Enphase is more about supply and demand now. Tax credits still. Contemplating making SoFi about 45% of Jeff, I think that's too much, but it's not crazy. It's not crazy. This is a very safe stock, tons of upside, tons of opportunity that hasn't been explored. And I think the assumptions that go into the models that value this company are just completely broken to the downside. I think this guy, this article that I was reading earlier has a much more realistic view of valuation that, all you have to do is maintain the current PE and the EPS is going to go, double uranium. So the stock price, even, kicking and screaming begrudgingly, has to go up. Fundamentals have to matter at some point. The bears can only write so many IOUs and trash the stock and kill calls, push down. This is less than double from a SPAC. What, 5 years ago? Plus of just incredible execution. You might say, well, it doubled. That's more than it should. I completely disagree. A SPAC is like a lottery ticket. Most of them completely go to shit. And I realize IPO SPAC, it doesn't matter. The current value is the current value. But, I'm trying to Karen, guys. I'm trying to give you some of my Karen logic. That's what I specialize in. Guys, anyway, I got to go. This has been absolutely ridiculous. Yeah, I wouldn't be holding Hood either, Carl. I wouldn't buy Hood. I mean, I'm saying I think the valuation is a lot more reasonable. I'm by SoFi. If you have money, buy SoFi. Don't buy Hood. Nafafepo. Nafafepo. Don't sue me, bro. Not financial advice for entertainment purposes only. Definitely don't sue me. I'm one of the usual suspects, I know, but is anyone aware of pulsar helium? Jim Stevens, I am not aware of pulsar helium, to be honest with you. Tortuga de Rio, the only thing you're going to regret is that you didn't buy more. I completely agree with you. Stockman Mark, premiums were good on Enphase. We'll have to put back in the watch list. Yeah, guys, anything you can sell options on and get rich premium, that's a good stock to own, in my opinion. Let's see, because also you can get in cheaper with cash secured put. Learn about cash secured puts, guys. Learn about covered calls. Not hard at all. If you think, oh, options are hard, they're confusing. If you can buy and sell stocks, you can buy and sell options. It's one of those things they want you to think is super complicated. You need all these crazy strategies. You don't. The brokers do most of it for you these days. Well, SoFi doesn't, which is kind of a problem for me. Anyway, guys, Jay Bizzles, did we talk SMCI? I haven't talked. I want to do an SMCI video. I'm going to try to do that. SMCI, like I said, those are my top three guys. That's my, trifecta. SoFi, SMCI, Microsoft, and as a more of a long-term play, it's I think a lot more speculative. I would throw in CRISPR. Great companies. I like Meta. I ain't mad at financial education, Jeremy, and after some of the drops, CRM, Salesforce, I mean, I think SaaS is oversold, bottom line. And I think the rotation out of software is far too early to call. This is a fickle market. The mob is fickle, but the mob also has a tiny wing, low self-esteem. They're all taters. Let's see. Sushi Chef, I'm big in three stocks: Racy, very diversified power logistics, nuclear defense, Enphase Energy, played SoFi, and of course SoFi. Okay, I'm mad at you. Everybody's really loving Enphase right now. I'm hearing that all over YouTube. I need to learn how to do those options. Covered call is just as simple as it gets. Watch a simple explanation on YouTube. You can really learn a lot of it in like 5 minutes. Cash secured puts, just very, very simple. You sell a put, you get the stock that much cheaper. Collect the premium and, get assigned. You own the stock for, the share price minus the premium, basically. I just do thesis investing. Well, an officer and a genital. Neo breakout. I completely agree with you on that, BS Lou. Neo is just gonna freaking go. And I think it might go past that 8 mark. I think Neo could go to 10 really, really quick. But, what the hell do I know? Do I ever buy puts? Not really. I mean, that's how I'll short a stock when I want to short a stock, but usually when I short a stock, it goes way up, so I try not to. Yeah, go to Uncle Bruce. Uncle Bruce is a very good teacher. Very good teacher. You just know with him talking that he's like patient. He wants you to learn. He wants you to do well. And I would give credit to some of these other guys too, Felix, Henry. I just don't think you have to spend a bunch of money to learn option strategies. You can learn it all for free. There's tons of information available. Even like brokerages like SoFi and others have simple explanations, investing.com, those types of things. Just start reading some simple explanations and go from there. Uncle Bruce is excellent to learn options, guys. Listen to Jay Money, not a lurker. He's very, very wise. He's bald, but he's very wise. Handsome man too, by the way. Shout out to not a lurker. I'm not gay, but I'm very, very gay friendly, and I do like to party. Don't forget to tickle the balls. Busy sailing around the world. Wow, good for him, man. I wish I had the ball sack to do something interesting other than just sit at my desk and get fatter and die. A casino feeling is covering over me. Probably better off to buy the stock, but $8 leaps just seems like a ton of fun. Yeah. I mean, as long as you're buying with a lot of time, as long as you're buying leaps, just don't buy anything short dated. Like I wouldn't buy any options right now under like 2 more ERs. I want to be at least, 6 months out at least, but preferably a year. Nothing wrong with playing options, but just give yourself time. These short dated calls, market makers just salivate. They just kill those things. They just punch you in your munchkin. They punch you right in the taint, which is not easy to slip a fist in between the walls and the dark star, the old starfish of truth. What YouTube video do you suggest? Let me take a look, Sushi Chef. I've been doing options so long. I don't understand it formally. I probably, if I tried to explain what I do, it would probably sound just like a fat guy stammering out sentence fragments, which is exactly what it would be. But actually, I make a lot of money on options. Honestly, if it wasn't for options, I wouldn't have the life I have. It's been very, very fruitful. Now, I don't buy that many puts, but I buy a lot of calls. Like in the CRISPR run, SMCI run, Sofi run, I made so much money from calls. I was building call ladders and just smacking the weeklies right in the butt. I think SMCI will start running when they start showing. Yeah, that's what everybody's looking for, Brian. Of course, that's a major knock on the stock. That's all they can knock. I mean, EPS 40% beat. Come on. Top line, massive beat. Increase my SoFi position by 10% on this dip. That's good for you, Bart. 13.5K shares. Nice position. Excellent. Well done. What's your average on that, my friend? Jay Bizzles, Invest with Henry, has an amazing 6-hour video. Yeah, Invest with Henry. I make fun of hard nipple Henry because he wore that one really tight shirt one time and he had super hard nips. But honestly, the guy's very, very smart. I mean, he worked for Goldman Sachs. He mentions that at least 60 times in every video. But in all honesty, and I'm being serious, I only make fun of people I like, guys like Felix. Felix, yeah. Over here in Monte Carlo, where Peruvian wham wham is ultra expensive. Feeding my 6 golden retrievers big tins of caviar while I burn $100 bills for warmth and powder my wig. Felix, yeah. We have a 70% chance of success, but with Peruvian wham wham in Ibiza, you have 100% chance of success. I like those odds. No, I'm not saying Felix is a recreational drug user, but something about that guy's tone. He just seems like he could party me under the table. You could not party with Felix. You got no chance. You have absolutely no shot. I was a corporate attorney and advertising executive, breeder of golden retrievers. I'll just prompt his business in our little community. I'm a member of the community. What's going on, Katie? Let's give Katie a third shout out. Why not? The great Katie Wentworth. Big up to you, Katie. I used to have a neighbor named Katie. She was awesome. A fellow U-turd loyalist, Low Country Luton Pawn, has 25K shares. Well, I'm not going to say exactly how many shares I have, but it's a lot. It's a lot. Dude, nice move. Yeah, Low Country Luton Pawn's no joke. I like that guy. What's going on? Yeah, guys, I got to end this video. Been talking for an hour and a half. I'm never going to stop. It's Un Poco Moss, guys. I appreciate you so much. We'd like to thank the great Alberto Berti Aviles for finally coming back. Again, I believe your nephew stole my wrench and he's never coming back. He returned it to Harbor Freight Tools for a store credit, so we're not going to get that back. I'd like to thank the great Jay Money, not a lurker. I'd like to thank the great Jay Bizzles, Sushi Chef, everybody, Katie, Bart, Herb. Who else we got here? Stockman Mark, of course. Dude Assface, the great Dude Assface is here. We got the who else? I don't know, guys. It's mostly the same people. Jeff, what's up, Jeff M? Good to see you. Billy Jack and the Butt Crack Boys once again. Billy Jack and Low Country, probably my favorite people down south. Probably my favorite people around as far as you turders. BS Lou, thanks BS Lou, appreciate you. Shikar, I always get these names wrong. Shikar Shavastava. However I properly pronounce your name, and I apologize for butchering it. Thank you for joining me. Sorry, I can't pronounce that. I couldn't sound it out. I'm hooked on monkey phonics. Tortuga de Rio, the great Tortuga de Rio, of course, Jay Scofi, Clap My Dog, Jim Stevens. Guys, I got to stop scrolling here because I'll just keep going forever. But yeah, I really appreciate it. Brooks, Everybody else, guys, everybody else is here. RP Cazolable. I know that probably says something, but I just can't get my brain to work right now because I'm a big idiot. But anyway, guys, thanks for joining me. I really appreciate it. It's un poco mas, and we'll be back soon. Maybe we'll do I really have been working on a Neo video, but it's really hard to get the level of understanding that I can get with a domestic company as a Chinese company. I know people in China, I know people who drive Neos, I know people who love Neos, but they're not like there's a bit of a language gap, there's a culture gap. So I just don't have the depth of understanding that just makes me go all in Neo. I have a pretty big position, and I really think it's going to go up, but there's a lot of fear around the ADRs, I think it's okay. You know, I don't think Neo's going anywhere. I love the company. Just, my fears are kind of more like in the mechanics of how dilution would work and how, the CVM, like the Middle Eastern investment, just rolled their investment into a sovereign wealth fund. I don't know what it all means. I love Amazon. I love Amazon. I know their margins aren't going to be great in the near future, but long term, that could be the biggest winner in AI. It's going to completely disrupt their cost structure and get rid of all that labor. The main reason my timing was good and phase buying as I understood to sell it when it was very high. I knew that, guys, anytime something just runs like crazy, I mean, should we have all sold SoFi at 32? I don't think so, because I think there was buying pressure there. Now, knowing what I know now that it's going to come back to 19, sure, I would have sold all my shares and then bought back. And I would have increased my share count by like 50%. Anyway, yeah, finance junkies are good. A lot of people talk about them. Anyway, guys, I got to go. I've said that about 50 times and I never leave. So thanks so much, guys. Peace. I'm out.